¿Listos?
Good afternoon, everyone. Thank you for being here today. We are the team from the Universidad Nacional Autónoma de México, and today we are going to present our analysis and hot recommendation on Cuervo. Cuervo is an international producer, marketer, and distributor of still alcoholic, ready-to-drink, and non-alcoholic beverages. Headquartered in Mexico City, the company has operating plants in Mexico, United States, and Northern Ireland. The main strategies of the company to support its value drivers are diversification through organic and inorganic growth, product and brand development, premiumization of products, vertical integration in tequila, and route-to-market distribution. Since its foundation in 1758, the company has been managed by the same family for 11 generations. The IPO took place in 2017, and now the board is composed by 7 proprietary and 3 alternate members. From the proprietary members, 71.5% are independent. This board is supported by 2 committees. Based on our fundamental analysis, we are giving a hot recommendation with a target price of 32 pesos to December 2018, which represents a 9.5% upside since the valuation date.
In the United States, the alcoholic drink industry is a highly mature market, driven by spirits and ready-to-drink sectors, with higher growth by value than by volume because of the good performance of premium products. In the spirit sector, Irish whiskey got a CAGR of almost 13% in the last 5 years, situation which benefits Cuervo acquisition of Bushmill, that nowadays represents more than 5% of its total revenues. In 2017, 65% of Cuervo revenues came from the United States, but according to our expectation, by 2022, Cuervo will be less dependent on the USA market with only 50% of its revenues. Cuervo has been growing over the industry and over its peers with a CAGR of almost 13%, principally because an inorganic growth, a geographic diversification, an increase in the potential consumer represented by millennials and C generation, and because of portfolio diversification. In Mexico, the alcoholic drink industry is not as mature as in the United States, with growth around 5% in the last 5 years, but with a tendency to decrease the next years to get a more stable performance. According to expectations, Cuervo's growth will grow in the next 2 years and then will be a slight decrease to keep them around 29%. Among its peers, only Cuervo has significant revenues from Mexico. The rest of them, Mexico is diluted in the rest of the world segment. Also, according to our expectations, the rest of the world segment has the highest potential growth for Cuervo, with a CAGR of almost 23% in the next 5 years. A situation which makes sense with Cuervo's strategy diversification being Europe its principal target, which has a good penetration for tequila and Irish whiskey.
The conclusion of our industry analysis is that the company will grow at a CAGR of 8.1%, and the revenues will distribute in different ways, becoming the rest of the world more important to the company. Cuervo costs are divided into 3 parts: raw materials, bottling, and labor. Within the expenses, the most important expense to the company are in advertising. This suffered with the volatility in the past, and it affected the profitability margins. Talking about the profitability margins, Cuervo has the lowest EBITDA margin compared with its peers, because the peers has a better portfolio diversification in geographies and in products. We expect an improvement in the profitability margins from 2019 to 2023 with the growth in revenues in the rest of the world and with more vertical integration in tequila. Historically, the company adds value to the stockholders. We consider that it will continue when the company invests the resources of the IPO in expansion capex and in acquisitions. the company has the highest investment in working capital compared with its peers and with the industry. This is because the company needs more inventories with the premiumization strategies. The target market to invest the capex is mainly rest of the world. The only bond that Cuervo has was used in the acquisition of Bushmill, while the resources of the IPO were obtained for investment in the company looking for both organic and inorganic growth. With the issuance of the bond, the cost of capital of the company decreased. Historically, however, the company preferred made its acquisitions with equity, regardless the cost increases. To our valuation, we consider that the actual capital structure is the target capital structure.
To get our target price, we assign 70% to a DCF model through free cash flow to the firm method, and 30% to a relative valuation using two main multiples. We got a target price of 32 pesos, gaining a potential upside of 9.5% at the date of our valuation. To compute the cost of equity, we use the CAPE model, assuming that investors are diversified and adjusting the risk premium of the countries where the company sells its products. We have to say that we use the unleveraged beta of the alcoholic sector and leverage with the capital structure of the company to reflect the systematic risk in our model. With respect with the growth rates, we assume that the company will have a higher growth rates in the next 4 years, around 8% in average. Those growth rates are determined by the reinvestment rate that the company will have in the next years and the quality of the investments. As the company becomes a mature company, we'll increase the level of free cash flows and dividend payments, and the only investment that we'll do is in maintain capex. So the main driver on the DCF model is the following: higher growth driven by potential acquisitions that the company will do given its sources of IPO, the expansion capex in rest of the world, and the quality of the investments, making a spread value over the investment. With respect with the relative valuation, we use the 4 most important peers of the company using 2 main multiples. The first one is the enterprise value to EBITDA, and the other one is the price to earnings. We got a target price under this methodology of 31 pesos 89 cents. We use this methodology because we wanted to know what was the behavior of the market above company stock.
We start our risk analysis with the qualitative risk assessment, taking into account the market risk with the consumption changes by the GDP correlation with premiumization and the volatility of the exchange rate. From the business and operational risk, we take the synergy risk from merger and acquisitions and the increase in the raw materials, mainly the agave prices, by an increase in demand or environmental factors. The strategies that Cuervo is doing to mitigate those risks is that they are increasing their own crops to 90% and is diversifying their products and brands to attend all segments through a strong geographic positioning by route to market. We analyze different levels of speculations, being the first one, the earnings power value, that takes into account the competitive advantage of the company if the value is above the book value. We find out that the valuation gap from our target price will come from merge and acquisitions. We stress our model with a Monte Carlo analysis and we got the main variables: the market implied risk on the WACC, the weighted revenues and taxation on the NOPAT, and the third one, the volatility of the exchange rate. We can see in this sensitivity table that the share price oscillates between 29 and 35 pesos. And based on our findings, we have a certainty of an upside of 63% from our target price. We can see in this graph the 2 distributions. The blue one is the price per share of Cuervo, and the red one is the intrinsic value of our DCF. And we can acknowledge that our target price from our fundamentals has the high probability from the mean. But currently, the price is below the 10% of the 2 distributions because of the market turbulence of the economy.
Summarizing, we are supporting our core recommendation with these 3 main points: growth through expansion capex and acquisitions, diversification through innovation, and the company will be less dependent to the United States and grow the revenues in the rest of the world, and finally profitability through the vertical integration and premiumization strategies of the company. Thank you for your attention. Now the floor is open for questions and answers.
Thank you very much for the presentation. One of the items that you mentioned as being an important growth driver for the stock was acquisitions that the company would be doing. That was one of the fundamental reasons for the company to deliver share price. But what I'm interested in is, over the past few years, many of the spirits industry companies have been doing lots of acquisitions. So how do you find good opportunities for this company to make investments, and good opportunities to make investments at a reasonable price?
Well, actually there was no disclaimer for the company for doing acquisition, so we use a methodology. So let me, using the market share for the industry and the revenue from the industry, we determine in the principal markets they can buy. For example, in the United States, there are almost 141 companies with a cost of almost $470 million. We get the price of the company with a multiple using the spirits revenue of the industry and the market share. We use the companies we are all clustered in others. They have no significant market share in the company, so we think it's like very easy, and they are in a target price to buy, which is possible for Cuervo to get them.
Yes, right now, adding the answer, right now, the company has a lot of resources to acquire this company right now. So we, in our model, in our valuation model, the potential growth that the company could have is the potential acquisitions that, for example, are the following. In Mexico, in United Kingdom, Spain, Japan, there are a lot of companies that has less than 1% of market share. So the company right now can buy it with the source of the IPO.
Given the size of Cuervo and market share in the US and the mood as you have been saying that on acquisitions, would your recommendation change if you visualize this company as not as an acquirer rather than as a target to be acquired?
We could not change the recommendation because of the earnings power value that we present in our risk analysis is giving the company is adding value not only because of the acquisitions. The company has an intrinsic value that doesn't depend only by the growth strategy.
Yes, if we see the earnings power value, that is a model that measure what is the value of the company with no growth. We can see that has a lot of competitive advantage right now. So we think that with those competitive advantage, could use it to acquire companies. We don't see that Jose Cuervo could be acquired from others because has a lot of presence in the rest of the world. Has a presence in 85 countries. So we think that the strategy of the company is growth and get more market share in the rest of the world.
And could you tell us a little bit more about the WAC construction regarding that it's a company that operates in many countries? You use a US approach or a Mexican approach, and why?
Yes. We evaluate the company in dollar terms because most of the revenues is in US dollars. So we take the main variables of the US market, taking the risk-free rate as the bond on 10 years. And the risk premium, I have to say that the risk premium, we take the base as the US, but we adjusted with where the countries of the company sells its products, all the risk premiums that represents, and we weighted in our only risk premium, that is 6.9%. So with this, the WACC is in market is the market value of the WACC, and we did this because represents the value of the company in dollar terms.
And we use the raw beta with the alcoholic industry with the modern tables. We was conservative and we use the taxation rate of 30% because we consider that if the company only paid taxes in Mexico, what is possible the value? For that reason, we use that tax rate and we use the raw beta.
What do you think about the recent acquisitions in two whiskey trademarks? Is good decision or not?
Well, actually, the acquisition with Bushmill is one of the principal targets of Cuervo, and actually, it's having a very good effect in the company. So now, a geographical target, where Irish whiskey is one of the main products they are using for growth. Actually, we check the possibilities to expand, because now the demand of Irish whiskey is limited for them. So it could be good to invest in distillery. So we check. There is 18 distilleries in Northern Ireland right now, and there is 16 distilleries planned to be built. In the next years. So it's actually a good movement, and it's one of the principal targets for the company.
Also, like my team say, the Bushmill helped through the route to market, because acquiring the company in Northern Ireland helped the company to go up to 92% of the route to market. Also, Irish whiskey have potential growth on the estimates of the market.
And at this moment, Bushmill, for example, contribute with 5% of the revenues. If you computing the multiple the company acquired is 7.5%, 7.5 in revenues to price, and we consider that this is cheap to the industry. It's cheap because it's a old enterprise, and because with the acquisition of Bushmill, you can penetrate the market and sell tequila in United Kingdom that has potential CAGR's importance to the company.
I want you also to go deeper on the competitors, not in terms of the names, but in terms of the spirits. Maybe it's not just tequila, or I don't know. And also in the market, not in terms of the countries, but the segments that they try to be on. Maybe in terms of the economic positions, it's a segment A, B, C, or maybe in terms of gender or in terms of age. So please go deeper on both things, the markets and also the competitors.
Okay. So right here we have a market share for the principal markets of Cuervo. It's United States and Mexico. Diageo is one of the main companies and has the major market share of United States. In 2017 was almost 17%, and Cuervo is 31.1. The market concentration is not a very high concentration market, so there are possibilities to get all these small companies, what I was told you in the first question, and also in Mexican market. This is the market share in Mexico. Cuervo has a strong position with the second place, only above Diageo, with almost 12% of the market share participation in the market.
So basically, they compete against any liquor, or
Yeah, actually they call it itself like a spirits company. So they want to change for tequila to another specialized in spirits, but spirits is like a very big segment to participate in products.
And for example, Cuervo at this moment has 65% of its revenues in USA. Another competitor that is near to Cuervo has 45% of its revenues in United States. For that reason, the peers are more diversified than Cuervo, and it affects the profitability margin in Cuervo compared with its peers. But we expect that the Cuervo, with the diversification strategies and with the investment decisions, tends to become a more similar company to the peers that we select.
Okay, time. Okay, thank you.